What is up, beautiful people? Welcome to another very long video. And the reason why this one's long is because it's not just going to be long, it's going to be extremely valuable. And this is the video that if I was starting off as a trader, the video that I would have wanted to find at first. Because honestly, when I started, I was deeply misled into learning a lot of nonsense, learning a lot of stuff that just led me further into the rabbit hole that a lot of traders fall into and never get out of. And I'm very grateful that I had two, not just one person that got me into trading, but two people in my circle that were able to show me that there's two different variations, two people trading completely different strategies, and there's two different results based on the strategies that they're trading. And that really taught me that what matters is finding the concepts that align best with you, finding a strategy that works best with your personality. And so in this video, I'm kind of breaking down a step-by-step guide of how to start trading from zero. So you're gonna want to download TradingView, like all the steps from downloading apps up to the strategy, the concepts that I personally use and believe the market runs and operates based off of, then going into actually trading with a funded account, going into trading with a live account. Those things are extremely important. Risk management, concepts, putting the concepts together into a model. These are the things that you should expect from this video. And let's not waste any time because this video is going to be really long already. So let's hop straight into it. So if you already saw from just my webcam being in the middle of the screen, you can see that I have a chart here open. And this chart is on TradingView, which you can see at the top right here. TradingView is the website that I don't actually trade on, but I use for every single one of my trades. I do not use the platform on my phone to actually mark out any of the concepts that I trade with, and like MetaTrader, for example, or TradeLocker, I don't use the chart on any of these to actually mark out and execute my trades. All I do with the actual live account that I'm trading or the current prop firm account that I'm trading is press the buy or sell button and close my position. But there are official charts that you should actually use, and those official charts are the Forex.com charts, and these are specifically going to be oriented around the concepts that I'm going to show you and the ones that you're going to learn. Fair value gaps, inversion fair value gaps, no wick candles, and liquidity. All these things are going to be super important that you have the right chart for, because these kind of concepts are extremely precise. And if you want to actually be able to execute on these concepts properly and not be misled, because look, if it closes on one chart below a gap, then that's showing you that it wants to go lower. But if it closes inside of a gap, then that shows you that it wants to go higher. And I used to use the wrong charts, and when it would close below, I would think that the concepts that I'm using don't work most of the time. And then when I realized that it was because of the chart that I was using, like it actually changed something inside of me, because like I was like, dang, this whole time I was operating with the incorrect knowledge. I was using a chart that like 50% of the time candles would close below and then it would go up anyways, and I'm wondering, okay, what is happening? Like, does this even work? And once I started using the official Forex.com charts for literally everything, if you're trading the Euro USD, use the Forex.com chart. You're trading any other pair, if they have a Forex.com chart, which every single Forex pair does, use it. Don't use the Oanda charts for gold. It will show you those gaps, but those gaps are going to mislead you. Forex.com are the official charts. First things first, you download TradingView on your phone. I have it on my phone. Most of the time we're trading on our phone. You add the pairs that you're going to trade. Now, I personally trade gold. It's the only thing that I trade, in fact. Occasionally in my group, because I have a lot of people that don't only trade gold, I occasionally send out other Forex pairs like Euro USD, JPY USD, or USD JPY is the actual name for the pair. And I send out those trades occasionally when like I see that the dollar is really strong or the Japanese yen is insanely weak. And so I'll send out a trade because there's just a great opportunity. But I mainly focus on gold. So what you're going to do is you're going to create a watch list, get rid of all the initial charts that they give you. All of these right here are ones that I personally added. So here we have the US dollar, the euro, Japanese basket, the Japanese yen, and USD JPY. I have two Bitcoin charts, two gold charts, but I don't use this one. Occasionally I just like check it because the market sometimes is the open of the market. It opens right away on this chart for some reason. And then it opens in like 2-3 minutes. Sometimes it's just for curiosity. I only ever use the Forex.com charts. And so that's what you're going to do with TradingView. You're going to delete all the initial charts that they have here. You're going to create a custom watch list, call it money, like me. And then you're going to add the pairs that you trade. So gold isn't gold. You're not going to trade gold. You're going to trade the Forex.com version of XAUUSD, which is gold versus the US dollar. And this is the one that all the prop firms and live account brokers are going to be showing you. So, okay guys, that's the first step. You're going to get familiar with TradingView. You're going to actually use it. You're going to get the charts that you're going to use. A lot of people trade NASDAQ and ES. And the reason why I trade gold is because I actually like trading at 5 p.m. Pacific Standard Time Zone. In my time zone, that's when Asia session opens. And it's amazing. I trade in the evenings. I don't trade in the morning. I don't have to get up at 6 a.m. in my time for New York Open or Silver Bullet at 7 a.m. I just literally get up at my regular time and I trade later in the day. And typically I even stay up into London if the trade's that good. And I'm like, okay, we got to watch this. Because sometimes there's news in the morning. And so I love trading gold because gold is a safe haven asset for all currencies. So it's going to run during all of these sessions. Okay, guys? So gold is amazing. Like, honestly, if you guys are learning from me, if you like joining my live streams, I'm live 2 times a day, literally 2 times a day, then trade gold with me. It's fun. You guys will be able to share what you think is happening. You'll be able to share your trades and see what trades I took. Like, that's a great learning opportunity when you are trading the same pair as your mentor and you stop looking at what your mentor is doing at some point and then you just see, look, this is the trade I took. Oh snap, he took it too, because you learned the same strategy. So if you learn the same strategy as me, inevitably you're gonna take the same trades, and that's already happening with so much of my students. They're like, oh, I'm already in. I'm like, bruh, they got in before I even saw that. Or if I'm on stream and they understand the same concepts as me, they'll point it out and I'll be like, oh, I missed that. So one of the biggest and most crucial aspects of trading is time frames, guys. Time frames, which is at the top. These time frames aren't normally there. You're going to have to hit this drop down menu and add all the favorite ones. I use the 1 minute, the 3 minute, the 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, 1 day, 1 week, 1 month, 3 month. And you just need to check like the 3 month maybe once every 3 months pretty much. The monthly one a little more occasionally. The weekly one pretty occasionally, like this week we tapped into a weekly for Valley Gap. The daily one pretty much every single day. You want to know the daily time frame, the daily narrative. You guys will see so much videos on the daily narrative. Daily narrative is so important. And how do you find the daily narrative? A lot of people that I DM, because like honestly guys, I'm a closer for myself. I send out hundreds of DMs every single day. And when I DM them and I'm like, who did you learn from? Like, how long have you been trading? Oh, 3 years. How's it going? Not so well. Who have you learned from? I learned from myself. And I'm just assuming that these guys literally, like, when they start trading, they look at the charts, they go buy a prop firm account, and take random positions based off of the trend or where they think it's going to go. You know, a lot of people don't even understand what trading even is. And so you guys have to understand that when you're learning to trade, learn from somebody specifically that's actually making money and is able to show you your trades. Like, I'm on stream every single day. You guys can see the concepts that I trade, and even in the Telegram. Like, I have a Telegram page where I post every single trade that I'm taking. Literally, the execution and where it goes. And you guys will be able to see that the concepts that I use are literally respected. 4-hour gap, close inside, expanded from that gap towards the no wick. Let's see what I said here. Oh, would you look at this? There's a no wick candle right there. And what did I say? 4090, no wick candle. It's going to expand from this 4-hour gap into this no wick candle and then expand up from there. And guys, what happened here? We ran exactly to this no wick candle. I took longs and then we expanded back up from there. Look at this. 4-hour rebalance and it expanded 4087. So, like, genuinely, these concepts work, and I'm going to be transparent as possible to show you guys that I'm exactly using these concepts and that they actually work. And so that's why when I'm going to teach you guys these concepts, you're not just coming in listening to me for no reason. You're listening to me because I'm transparently showing you that these concepts actually work, and they're the same exact concepts that I use for every single trade that I execute, and I show you guys for completely free. So I will have a lot of links in the description. My Discord community, my Telegram community, as I just showed you guys. and you guys will join and be able to see all this stuff. You can scroll up through like literally years of daily posts throughout my trading days of me sending out the trades, my executions, my withdrawals. Real money being made. Same with on my streams. So the next step, as I mentioned, is to time frames, right? Use the time frames, time frame alignment. And how do you find that daily narrative? You're going to find the daily narrative by first learning about the concepts. So what are the concepts that I actually use? So here are a lot of the concepts because I was doing a boot camp. I'm still not done with this boot camp. Just gotten extremely busy, but day 1, day 2, day 3, day 4, I covered all of these concepts. Few of the concepts that day 1 was this, day 2, day 3, day 4. So you guys can see liquidity for rally gaps, inversion for rally gaps, which are disrespected for rally gaps, order blocks, kill zones, immediate rebalance, the Reaper for rally gap, and market structure, which I just don't think I covered in that day. But I think order blocks is the one that I use the least, but all of these are crucial. Fair value gaps and immediate rebalance, one of the most crucial and important concepts. Kill zones, obviously timing is so important. Then scaling time frames, time frame alignment, that's what day 2 was all about. The purpose of each time frame, using the higher time frames for your narrative, using the lower time frames for your execution. Session power of 3, the power of 3, accumulation, manipulation, distribution. Let me break that down for you guys real quick. Accumulation, manipulation, distribution. The word accumulation is just pretty much another word for consolidation, and everybody's familiar with consolidation. Price typically just moves sideways for a long time, and that sideways movement ends up messing up a lot of traders. And what it's doing is it's accumulating. It's building up highs, it's building up lows. Now, why does it build up these highs and why does it build up these lows? That's because one of the main operating concepts in the market is liquidity, which means that the market likes to then, once it builds up these highs and lows, run and take them out. So whether it runs towards the sells first, where the seller stop loss or the buyer stop loss is first. So whether it runs to the sell side first, where the buyer stop losses are, or it runs to the buy side first, where the seller stop loss are, it then begins to make people think, oh, we have a breakout, let's expand. We got a bunch of bullish momentum, let's buy. And then it turns around on them and runs on the opposite side. And this is known as the manipulation stage. So the power of 3 right here, session power of 3 and just daily power of 3 in general, is this accumulation, manipulation, and distribution. And our objective is to catch this last and final leg. The last and final leg known as the distribution leg, which means that after the price manipulates on the buyers and sellers, it then runs towards the true narrative. So you don't want to be trading inside of the accumulation, and that typically happens in between sessions. So let me show you what that looks like. In between sessions, here is London session ending, and here's New York session starting. What do you notice between that? So London session, one-sided direction, right? It ran in a specific direction. New York ran in a specific direction, and it actually expanded. But what happens between these sessions is pretty much nothing. It consolidates, it accumulates, it builds up liquidity. And you can see here, if I use this box, that we pretty much built up this low right here. We then ran up and built up a high. So then the market came and took out, because I'm on the 30-minute time frame. Mind you, on the lower time frame, this really looks like a sideways movement. It came down and took out this low and then ran on the high. That is a classic example of that accumulation, manipulation, distribution. And similarly right here. So New York session was the move that actually ran on the buy side after it created some accumulation right here. So you can see all this accumulation is always in between the sessions. You can see prior to Asia session opening, it was kind of like this bad price action right here. Like we had this bad sideways movement, no real direction. Asia session starts, we take out some liquidity and then we start to expand. London session starts, we take out some liquidity and start to expand. But in between the sessions, Asia and London, once again, you see that we're kind of just not moving anywhere. We tend to kind of range more often. And so if you're trading in between sessions, you're most likely to actually catch a lot of the accumulation, which is where most traders get cooked because they just don't understand that they're literally trading at one of the worst times. And no matter what direction you are, like it's not about, oh, I took a loss. Maybe my narrative is incorrect. Let me switch my narrative. It's not about that. You switch your narrative, you're still going to get cooked because you're trading in between a range that's moving in both directions. This is the range that takes out your stop loss 20 times and makes you blow your account in a single day before the session even starts. Stop trading pre-market, stop trading post-market. You want to be trading at the right times, knowing exactly why. And one of my favorite times, and the times that I'm typically live at every single day, is 11 a.m. Pacific Standard Time, which is my time zone. 11 a.m. Boom. 11 a.m. started right here. And the reason why I like trading this time is because of the 4-hour candle. And during this day, we actually caught such a beautiful trade. I accidentally switched to the homework I was doing. But we caught such a beautiful trade, which I caught on live from this 4-hour gap. It got closed above, and this is a bullish gap. So during that time, we essentially hopped in at 11 o'clock once we got that new candle, and we just literally caught the expansion towards buy side. And this expansion towards buy side was quite literally one of the most perfect trades that I've taken in a little minute, because we missed the high that I was aiming for, which is this high. So we missed that initially. This was the target. We missed it right here in the first trade that we got. And honestly, I took a little bit of an SL right there. We were looking for that and we didn't get it. Price then came up and tried to do it one more time, and that's when we actually got in. It was this high. No, I was aiming for this high. Sorry, guys. I totally confused myself because I started trading after the first initial move. So we waited for this IFEG. It didn't give us the entry. Took out this high, reversed, and it didn't take out this high. So this is the high that I was aiming for. And I can pull up my Twitch and literally just show you guys so you can see. I started using Twitch and recording all of my lives. So on my channel, you can see the videos that I recorded. Long form. Where's the long form? I guess just right here. So here's the clip of that exact stream where we took that trade from here. You can see right here. This is where we entered the trade after it created a second IFEG, which is one of the concepts that I'm going to show you. Right here. We ended up closing above this gap right here. There you go. So we closed above this gap and I hopped in. Now obviously we don't want it to pull down straight through the gap and kind of show us that it's disrespecting it. But I was fine with this. We had a great stop loss placement. And it ended up running up from here straight on this high, and that's exactly where we took profit, and that's exactly what I was aiming for on stream. You can see here we literally took that take profit from this 4-hour gap straight to that high. So like these concepts, and I recorded it live, by the way. I was just making these clips for Instagram, but somewhere here it should be all of my live streams. I'm just not sure where to find them. I wish I knew. And so the point that I'm trying to get across is that I have a model that works, and this model involves like trading during specific times. And the reason why I was showing you this specific trade is because I traded even though it's like post market. Like you can see here the session indicators. People don't really know that you can trade like this late into New York session. We got Asia, London, New York, right? And the trade that I was taking was like right here, or no, 11 a.m. right here. This is the wrong day. I'm so far away. Here you go. So the trade that I took was right here, which is way past the New York session open, right? Why was I able to take this trade? Because there was a 4-hour confluence. You saw that I had marked that out on stream. And essentially at 11 is when this 4-hour candle closes and we get a new 4-hour candle. So during 11, I was looking for that 4-hour candle to expand. And that's exactly what we got from that gap. We got that expansion. Once 11 o'clock opened, we got the expansion. That's all we needed. Target a little for value gap right here. Target this high, which is what we were aiming for. And boom, one and done. I secured my profit for the day. I'm happy, and I caught such a beautiful trade. That's the kind of stuff that you're able to do if you know the right times to trade. If you don't know the right times to trade, what's going to happen is you're going to try to hop in on the lower time frames and find something precise. Like let's say, for example, right here inside of this move. And you're just trying to catch some bullish expansion. Like if you hop down to the lower time frames, you're just going to see that there's none of that. There's none of that available for you. No matter what direction that you're looking for, there's nothing available for you. Like would you ever want to trade this kind of barcode price action where it's literally moving sideways? It's moving sideways right here. It's moving sideways right here. It's literally creating barcodes. Like that's not the kind of price action you want to be trading. You want to know the exact times when the market's going to actually start moving in the right direction. Like when it starts pumping. and you want to be there for that. You want to be able to catch those kind of moves. And I trade in the evening during Asia session as well. And most people, they hate on Asia session. But for me, I don't like waking up too early in the morning. Like, I live in Pacific Standard Time in California. So for me, waking up at New York Open is actually dreadful for me. Getting up at 5 or 6 a.m. or 7 a.m. for Silver Bullet, dreadful. But Asia session is at 5 p.m. for me. I love that. I honestly love that. So I chose a pair that moves during Asia session. You guys will literally see during Asia session, this actually moves. Gold literally moves both directions. We get some of the biggest movements during Asia session actually. Boom, start the expansion of the day. More expansion. Asia session on gold is phenomenal. Let me show you NASDAQ. For NAS 100 is the Forex one. You can see Forex.com. As usual, I'll always tell you guys to use the Forex.com charts. What do you see during Asia session on NASDAQ? It's barcode price action. Right? Let's go look at some more Asia session. Barcode price action. It's moving sideways. There's no real moves. Some great barcode price action. Like, this is a classic example of the kind of price action you don't want to be trading. Do you guys see this? Why? Because NASDAQ is a USD based pair. So people are hating on Asia session. They're like, don't trade Asia session. It's dumb. And you guys, you get misled into thinking that Asia session is a bad session. But you guys don't understand the way the markets actually work. And it's operated based off of the banks and specific times and specific currencies. NASDAQ is a US pair. It's a USD based pair. So you can see during New York session, some beautiful expansions. It's going to give you the nicest expansion that you'll see. Right? But Asia session, it's not going to give you anything because it's not a Japanese yen based pair. The Japanese yen is not going to move the market. The Asian currency is not going to move NASDAQ. So yes, it's going to be trash for NASDAQ. But is it going to be trash for USD JPY? I wonder. No, it's not. Look at this beautiful expansion during Asia session. Look at this movement during Asia session. Why? Why? Somebody answer me the question that I'm asking you guys. Because it's USD versus the Japanese yen. So the Japanese yen plays a big factor into where this pair goes. Right? So, come on, guys. Lock in. You can choose a pair that operates based on your time zone. If you live in London, then go and choose a pair that's going to move during your time zone that you enjoy. If you can trade Asia session, trade USD JPY or gold like I do. If you can't trade that, trade a Euro USD pair or Great British Pound versus the US dollar. If London's the time that's later in the day when you're not working, find a pair that works with your personality when you like to wake up, when you're clearest in your mind. If you're a morning person and you live in the USA, by all means, hop in NASDAQ and trade it in New York session. You'll have a great time. If you're not, don't bother with it, guys. You don't have to. Don't get manipulated by the people that are giving you information but not fully explaining it to you. And that's why this video, I'm really trying to dive into like what actually moves the market. How you can actually just have freedom with what you're choosing. Trading shouldn't be something that you're limited by. The whole point of you trading in the first place is so that you can have more freedom. If you want freedom, then stop forcing yourself up at 6 a.m. when it makes you miserable the rest of your day. The whole point of me trading is because I didn't want to wake up for work in the morning. I wanted to be able to make money and not have to wake up and feel dreadful throughout the rest of the day and try to go to sleep at 9 p.m. so I can get some good rest. It's 9:45 p.m. and I'm recording a 2-hour video right now. That's the difference between me and somebody that doesn't do their own research, essentially. They just listen to whatever their social media sphere is telling them. They don't do their own research and they don't find out what actually moves the market. Why Asia session's bad, and is it bad for every pair? Guys, come on. I've been showing so much people and I've been getting messages saying like, yo man, like I really appreciate what you're doing for us. I honestly didn't even know that you can trade gold during Asia session. And I'm like, yeah, because everybody says that Asia session sucks, but it doesn't. And I have a beautiful strategy. You can find the video on my page as well, explaining my 3-step candle model. And that one applies best to Asia session because it's the start of the day. Okay, so Power of 3 explained. We can check that off for this video as well. The next thing that I get through, the next concept, Okay, we got liquidity, beautiful foundational concepts. Review the sessions. So there are obviously different sessions. There are kill zones, like the first hour of the sessions. Power of 3 of macros. Macros I'm not going to dive into, too complicated for you guys. As beginners, you just kind of want to focus on the key foundational concepts. Fair value gaps, inverse fair value gaps, liquidity, and immediate rebalance. Those are the ones that you want to do. As for the other ones, and if you actually want to learn macros, you want to learn specific models, you can find that in my actual detailed videos on those specific concepts. I'm not going to give you a little bit of information that you're not going to understand, and it's only going to cause you more information overload, and you're not going to be able to properly sort it out to actually use it in your system. Better to not know something than to know something that's going to make it difficult for you. Dive into timeframes and candle closes. So the thing with fair value gaps, which let me explain to you, fair value gaps are these gaps that are formed between 3 candles. Pretty sure I showed it to you guys. This isn't the best example, and this also isn't the right chart for USD/JPY. You gotta use the forex.com one. Let's see if that makes a difference in that specific area. No, just barely. It closed above. Maybe because it's the 1 hour. Yeah, so that's why. Okay, so fair value gaps form between 3 candles if the middle candle has a pretty big body, and the wick of the top and the bottom candle don't overlap. So you can see here, this one doesn't even have a wick, but it doesn't overlap. And so this is a fair value gap, and this is a fair value gap that's most in the premium. So one of the biggest foundational concepts as well that you're going to learn, premium and discount. So just like this, you mark out like the Fibonacci if you've seen. And look at my Fibonacci, by the way, guys. Look at my Fibonacci. Does that bring some questions to you guys as to why my Fibonacci doesn't have all these cool levels that other people do? Optimal trade entry, 0.62, 0.705, and then it extends to other levels like the standard deviations of -1, -2. Is anybody curious why? Because you don't need it. You don't need it. All you really need is this right here. 1, 0.5, and 0. And all that you're measuring is the midpoint, which would be the discount or the premium. So if you're trying to sell, you're trying to get in your position above the premium, inside of the premium. And the reason why, in simple terms, is because if you're selling, the buyers that bought down here are trying to sell their money. They're trying to sell their positions in as much of a premium price as they can. So let's go back to gold just so I don't confuse you guys. I don't trade USD/JPY. I trade gold. So essentially, same here. Like you're looking for sells in the premium, you're looking for buys in the discount. So let's clean up my charts. Let's hop into a lower time frame. You can open up, by the way, object tree, because nobody teaches you how to use TradingView, and sometimes for beginners it's really confusing, but it's actually pretty simple. Here you have the watch list. Here you can set alerts where if it crosses a specific level, look at this, guys. I used to be trading at 3,300. April 25th. Oh, that's not actually that long ago either, because literally gold expanded. I used to be trading at 2,800 actually. And then you have the object tree. An object tree, you instead of having to manually click and delete everything, you can just spam this trash can and it'll delete everything. We got indicators as well. The indicators that I use are, I used to use the fair value gap indicator because I just couldn't see them myself, and it's very helpful. Now I can mark them out. I see it like bread and butter. Like I can just look at it and see that there's a fair value gap there. There's a fair value gap here. There's no fair value gaps here anywhere because it's a bunch of consolidation. There's no fair value gaps here, but there is a fair value gap right here and right here. So if you guys can pause and like think about why the rest aren't fair value gaps, that might help you guys as well. So I used to use this indicator just because it helped me see the fair value gaps. So you can see here I marked out all the fair value gaps. It doesn't show the ones that were already closed above. By the way, this is a bearish fair value gap. It closed above this fair value gap and then it used it to go higher. That is an inverse fair value gap. It's called an IFG. So that's another thing. What was I even talking about? I'm just bouncing between a bunch of stuff. Indicators. The indicators that I use. Fair value gap indicator. Helps you see it. okay? Then eventually you get rid of it. Higher time frame power of 3 indicator. It shows you the daily candle to the right of your chart. So sometimes you forget to look at the daily candle. You forget what you're aiming for. If you have the daily candle constantly to the right side of your screen, you're not going to forget about the daily candle, okay? So that's very helpful. I love using that tool. That's my favorite indicator. I still use it to this day. I'll never stop using it. ICT kill zones, the cleanest kill zones indicator that I've seen. I don't like all the boxes that shows the highs and lows. I just really want to know when the session is. I manually will find out what I'm looking for. I don't need an indicator showing me as soon as I open my charts the highs and lows and making me think mentally that it's going to go for those highs or lows. Because let me tell you the truth, it doesn't always take out the highs or lows. It does whatever the price action wants to do that day, whatever the price action is engineered to do that day. So don't let an indicator confuse you. Don't let an indicator psychologically or like subconsciously, you open up the charts for the first time and you're like, oh, those look like some nice highs and lows. It's going to take those out. I'm going to aim for those today. And then it ends up using a fair value gap in the discount. And you're cooked. You messed yourself up because you're using an indicator. You're relying on an indicator. I've seen some people have an indicator, program an indicator that says buy or sell for them. You're lost, bro. Just quit trading if you do that, because at that point, like, I don't care what you programmed into it, you're going to trick yourself. You're still going to be unprofitable. It's the honest truth. That's why I am 6 years in and I have not programmed a bot for myself. I'm a computer science major. I was a computer science major. Because I didn't need one. I know that the market isn't tradable at certain times, and you as the person have to manually understand that stuff. Like, you can't tell the bot, oh, there's a tweet coming out, like, don't trade. Or, like, it's very helpful for specific stuff, but I just would not recommend it. Learn how to trade manually yourself. You have to go so into detail with all the factors that go into what makes a profitable trader into making a bot, and it's not worth your time nor the money. So, come on, guys. Lock in. This indicator initially isn't going to look like this. It's going to look a little different, but I put my things to the top. I think normally it's on the bottom and it has a bunch of different colors. I changed all my colors to white. I made it look clean. I love my charts in these colors because it's not psychological. Green and red is very psychological. That's why I don't use this fair value gap indicator. You could change the colors of them, though. You could change the color somewhere. There you go. Change it to different colors. You can see that. Looks pretty clean, not going to lie. If you want to use that indicator, use it. ICT kill zones, liquidity levels, that just shows highs and lows. I don't use that anymore. Order blocks, another helpful one. I don't really use order blocks that much, if I'm going to be honest. I'm an ICT trader, but I don't like using order blocks. I think for value gaps tell a better story. Order blocks are at the high of the move most of the time, or if you're using lower intraday, like 1 minute, you're looking for an order block, typically it would be at the low of the move. And honestly, guys, I don't like trading at the low of the move because of liquidity. You try to trade at the high of the move and then you enter right here and it'll run up and wick you out. So I just don't like trading off of order blocks. I think honestly it's the worst concept. A lot of SMC traders are going to hate on me for that, but for value gaps, inversion for value gaps, liquidity and immediate rebounds will make you a profitable day trader. That's all you have to learn. I'll keep saying it throughout this video. So I went over the indicators. I went over, what else? Some stuff for inversion for value gaps, right? So you guys can see that this is a bearish gap, but it was used in a bullish scenario here because the market came up and closed above it. Then it came down and respected the midpoint of this gap. Okay, no text messages, no important text messages. Let's get back to this video. What else? Time frames, candle closes. So with fair value gaps, candle closes are super important. Do not study the candlestick Bible. That is nonsense. I read that thing before, and I used to trade trend lines, candlestick patterns like dojis and triple bull or bear candles. Like, there was weird names for each and every candle. I'll show you guys a picture so you guys don't get deceived. Candlestick patterns. Oh my goodness. I can find a picture for you guys and post it on Instagram, but I literally used to look at these and I had a computer mat, one of those mouse pads for these candles patterns. And it's just a complete nonsense, guys. Tweezer bottom, tweezer top, triple bear, whatever, 3 outside up. Like, that stuff is complete nonsense. Don't learn it. Don't waste your time. Okay, sorry to break it to you guys. Sorry to be so direct, but I'm telling you guys, if you're learning from me, you're already taking a step in the direction of my strategy, my psychology, my outlook on the market. So if you actually are watching this video and you've gotten this far into the video already, then listen to me and drop the stuff that I tell you isn't going to help you. It's going to deceive you. It's going to make it harder for you. It's going to trick you. Thank you very much. Fair value gaps, inverse fair value gaps. It's a bearish fair value gap, but it's used in a bullish context because the market closed above it. That's how it works. Even though the wick came back down through it, the body showed that it was respecting it. So maybe if it tapped back in, I would have gotten in right here. Sometimes if the trade is too big, like the only fair value gap is down here, I will put my stop loss a few pips below the low of the inverse fair value gap. In this situation, I might have taken a stop loss. Would I have taken a stop loss and stopped trading? No. If I took a stop loss because I entered before this candle closed, then once it pulls back up after I took a stop loss and I see that it closes up here, I'll re-enter and do the same exact thing. Because I know the way that candlesticks work, and candle closes are what actually paint the picture. Now sometimes you'll see, I'm going to find an example for you, the market will run above a inverse fair value gap. It'll tap into it just barely. Look at this. It'll tap into it just barely, and then it'll continue higher. Happens all the time. Right here, another example. This one just barely closed above it. I wouldn't use that as an example. Let's see. I want to show you guys a beautiful example of this exact thing happening. Let's see, inverse fair value gaps. Here's another example. Like, you can literally use the bottom of it. It closed above right here, and it came back, tapped into it, and then it began to expand. If you put your stop loss below the midpoint, if it's so massive, put it below the midpoint. You got the midpoint of a gap, you can go to the style, middle line, and that middle line is a big defensive zone. It's going to protect your stop loss, especially if it's such a big gap. Why? Somebody answer the question. Premium discount. Okay, we have a premium of the fair value gap, we have a discount. Typically price expands. Sellers obviously want to sell their orders in the premium, and buyers want to buy in the discount. So by the time it gets closer and closer to the discount, price is going to start rejecting because people are already going to start buying here. Okay, so the premium discount of a big fair value gap, super important concept that you can learn. Now, in terms of learning the concepts, where can you learn from? Who would I recommend other YouTubers aside from myself? Now, like I said, if you're already this far into this video, just watch my videos, because I'm sure you like the way that I teach. I'm sure you like my content. I'm sure you've seen the way that I trade, and you think that I'm transparent. You think that I'm doing great. Then copy my strategy, learn the concepts that I'm using, and you can watch my videos because I explain it to you. Okay, so you can watch that. Full Send Traders is my bigger Instagram page where I have more raw content that I do not edit. I don't do any jump cuts, nothing. So I did record a lot of the content on there. I have some trade recaps. That's mainly what I post on there. But I also have the day 1, day 2, day 3. I'll be doing 7 days of those. Next, I have a YouTube that's primarily focused. I started this one recently, 3 months ago. Primarily focused on edited videos that are focused on strategy, focused on specific concepts that I trade, immediate rebalance, 3-candle strategy, all these things for value gaps, more focused and structured content. So if you want to watch those, you can go there. Now, in terms of, I don't even have water. In terms of other YouTubers, let's say you don't like the way that I talk, you don't like the way that my voice sounds, you don't like how direct and rude I am about your candlesticks. Here are who you can learn from, and people that I actually learned from. Casper SMC, great videos, great YouTuber. Honestly, I watched his videos years ago because ICT was boring, slow, and I actually enjoyed his videos. I learned a lot. He made it simple. T Trades, another YouTuber. You can search up like whenever you're struggling with like fair value gaps or stuff. Now this guy, he's a YouTuber. He's a professional YouTuber, guys. Professional YouTuber, by the way. He will be posting content to post content. I would not recommend watching all of his videos. I definitely don't recommend watching all of his videos. What I recommend you do, because he has great videos, so nicely animated, really great structure. Watch the specific videos that you need. Like, there's going to be so much random videos that you don't need. Like ERL, IRL, I don't use that. I don't overcomplicate it like that. It's liquidity to me. Formations, like, guys, there's a lot of stuff that you genuinely don't need, and I don't recommend it. What you need to do is not go and watch his videos, like all of them. You search up T-Trades FVG, and there's a great video explaining fair value gaps. Boom, T-Trades. Watch his video on fair value gaps. If you want to watch a video on inverse fair value gaps, search it up. T-Trades inverse fair value gaps. He'll have a nice video on inverse fair value gaps that you can learn about them from. Okay, so that's another great YouTuber. And then the root of the source. Now, I'm on a different YouTube channel, but if you were to look at my actual YouTube channel and my videos that I viewed, I think it actually might be this one. I think it might be the full send ones. So these are from months ago. I've learned from him years ago. Let's see. I swear there might have been another channel as well, because I've literally watched almost all of his videos. So you can go to the playlist, start off with 2022 mentorship right here.
Imagine.
But like I said, this guy talks a lot. His videos he talks very slow. I've seen all of this, I promise you guys. Probably just on a different channel. I'm not sure which one. But I used to watch all of ICT's content. I studied him straight up for like 2 years. 2 years, and then at some point I learned all the concepts, and I liked trading gold. He trades NASDAQ. Yes. I don't like trading that stuff because I don't like getting up in the morning. I don't like trading New York session. I like trading PM session of New York, which is the 11 a.m. that I showed you guys and the time that I go live. And then Asia session, which I also go live in Asia session. And I trade that on gold. So I took the concepts that I learned from this guy. I learned from the root of the source. The other YouTubers kind of just helped to make simple for me. And then I went and structured the stuff that I learned into something that made sense for me on the pair that I actually like to trade. And that was gold. Okay, so same thing. You learn from the root, and then when you struggle with something, you get bored, you go to my channel, you go to Casper SMC, you go to T-Trades for specific content. Remember, YouTubers, myself included, but I'm a little more transparent, I'm a little more raw with it. We make videos to make videos sometimes, okay? Don't watch all the videos. Don't try to take everything religiously. You know what you're supposed to learn and go and learn that specific stuff, okay? And then go watch it in the charts. Don't learn a secret strategy video and then go and try to replicate that in your strategy and follow that only for 100 trades to see if it's profitable. It's not profitable, okay? What's profitable is what works for you. So finding the session that works for you, the pair that works for you during that session, and then building a system to trade that specific pair during whatever time that you're trading. There's specific session characteristics. London session has the Judas swing, which typically fakes you out. Okay, next. When you start trading, so actually start trading, I would recommend that everybody starts trading with a demo account, just to figure out whatever the platform that they want to use. If you want to use TradeLocker, like I love TradeLocker, I use it for my prop firms, I use it for my live account, all in one. Go open up a TradeLocker demo account, press buy, press sell, spam some positions, close the positions, take partials, learn how to use the platform before you dive into a live account or a prop firm account, just so the platform isn't a learning curve for you when you're hopping in. Now, in terms of the broker that I use, the prop firm that I use, I'll link everything below, but I'm kind of going to break down why and when you should start trading live, when you should start trading with a prop firm, and what prop firms are, what a live account is. A live account means that you put your own money in. So let's go look at some numbers. You put your own money in, you put $500 in, you have $500 to risk. You blow the $500 you on a live account, you personally lost $500 that you took out of your bank account and you put into the live account, okay? That's a live account. Put in $50,000. You're trading with your own $50,000, and you can lose it. Every trade that you lose and you take a stop loss on, you go from 50,000, you lose 500, 49,500. Okay, so it's serious. It's real money. Now with the prop firm, you can take those same $500 and you can buy a 200K account, and now you can trade with $200,000. Now you have an evaluation, you have rules to actually pass the account. So let's say get funded today. 200K account, 2-step, $699. Right now, this prop firm, it's the one that I use, and I obviously have a coupon code, but right now they have a 50% off. So that's what I say, $300, you can get a 200K account. So literally think about it, 200,000, but it's a 2-step account. So 2-step account, and they have specific rules. Like, look, you can add 15% for bi-weekly payouts, which means every 14 days. So obviously, you cannot take money out every single day. On a live account, you can take money out every single day, okay? So what's the benefit, what's the pros, the cons, and what should you do? I would say you start with a prop firm account if you have absolutely no money. If you have some money, but not enough to make a good amount of money and be happy with it, if you have a good amount of money, but not enough, once again, I'm going to say the same exact thing, you put it into a live account first. Why? Because with a good amount of money but not enough, you can still make enough money to put into a prop firm account. I think live account is so much better for a beginner. People say always go with the prop firm first. Yes, go with the prop firm first if you're broke. If you're broke, go with the prop firm first. Start with a 5K account that might cost you $15. Prop firms have those kind of accounts. Let's see how much the $15 or the 5K account is right now with a 50% off. $15.75, okay? So if you don't have $15.75, don't eat a cheeseburger today, okay? Don't, whatever you spend your money on, don't do it. And buy a 5K account, okay? If you're broke, go do that and pass the account. If it takes you 5 accounts to finally pass and get funded, then it takes you 5 accounts, 15 times 5, okay? Learn the prop firm, learn the rules, get the payout. And then eventually you want to have both a live account and a prop firm account. Now, what was I saying? With the 200K account, you get a 200K account for about $300 when in the promo. If not, let's say $600, whatever. $600, still amazing. You pass the account. With your own $500 or $600, 1% of 600, $60 or $6, how much is that? Times 0.01. $6. 1% of 600 is $6. 1% of 200,000 is $2,000. Okay? So don't blame me for not being able to do basic math like that. But $200,000, you spent $600. Okay? So that's where the benefit of a live account comes in. And now if you have a good amount of money but not enough to be happy with it, you can put it into a live account, you can risk it, and you can flip it to an amount that you're happy with. Okay? Like, genuinely. You will also lose the money. You will blow a few live accounts. But I've personally done this before. If you have a good strategy, you learn how to properly layer in positions, then you take a good trade and you literally, it's called full porting, which means you're risking all the money in your account and you just keep adding positions. So if it pulls back on your position that you added and you're completely over leveraged, it's slowly going to start taking out your positions and you're going to blow the account. Okay? If it starts pulling back. But let's say, for example, you cut a beautiful trade from the discount and it actually starts expanding. If you keep adding positions to the top, you'll get a good amount of positions from a $600 account. You can turn it into 10,000 or 20,000, 30,000. You can do that, okay? I'm telling you guys, you can do that. It's possible, and I've done something similar. Now, should you do that? Not if you can't lose the money, okay? Don't do that when you can't lose the money. $200,000 prop firm account, trade it normally, get the funded account, get the payout, wait for the payout. With this specific prop firm, it's 1%. All you have to make is 1%, so $2,000, and you can wait for a payout. 14 days. The first one's 21 days, or you can get the add-on, and it'll always be 14 days. You can also work towards a 7-day payout, so every week you can get a payout once you get there, once you scale to that level. And so you guys see, like, all you really have to do is get 1%. You get 2% or 3%, or you get 10%. 10%. Oh my goodness, you got a 20K payout. You see the value of prop firms? Now there's going to be rules. You're not going to pass your first account. Maybe you will. Some people do. Some of my students do. Like some people, they're literally so scared, they will not touch a account. They will not put any money on the line until they have figured it out. You know what I tell them when they pay me for my one-on-one mentorship? I tell them, go buy an account now, buddy, because that's how you actually start. So they're being scared this whole time. I recently made a reel about this. I think this morning I actually made it. Or last night. What I said is, you don't buy the account when you're ready. Buying the account makes you ready. It's all your psychology, and once you start, you take accountability for your actions and you get to it, okay? So prop firms, live account. I will link the stuff in the description below. So you guys will see exactly what prop firm I use, like the promo at the moment, because I'll probably have to update that on this video. This video will probably be live for years. And I'm sure a lot of people will watch it, and I'll lead a lot of people in the right direction. I'll update it with whatever the promo is. My code is always Marky. If you're shopping at any prop firm, use code Marky. You'll get a great discount. I typically have great partnerships, great relationships with prop firms, so you can use my code and you'll get a great discount. You can hit me up directly and I'll give you better rules on your accounts and stuff. Like I said, I have great partnerships, and honestly, when I started, I wish I could have gone to somebody like me and asked for this stuff. Because like I've been giving people bonus accounts. I've been giving people like even giveaway accounts. Or like when they buy an account, I give them an extra one for free. Or I give them better rules. That's the kind of stuff that like I can do for you guys, and just don't be shy to ask. Don't be shy to tell me that you blew your account. It happens. I made a reel as well recently saying I blew over 40 accounts. If I was to go back and count every single account I blew in the first 2 years that I started, I would not be able to get to the end of the list. So stop being afraid. Like I said, you don't start the account when you're ready. Buying the account makes you ready because you either blow it and you show yourself, hey, I need to learn more. I need to learn more seriously. If you're broke, once again, start with prop firms. If you have some money but not enough to be happy with, you can start with a live account. The end goal, have both. Protect your capital. Spread it out. Have a prop firm account. Have a live account. Have multiple prop firm accounts. Max allocate at a prop firm. Make sure you have all the accounts that you can. Get to a point where you have max allocation 200K prop firm accounts on multiple prop firms. Start with the one that I use. They'll pay you, max allocate here, start moving over to another prop firm. Create a swing trading account and a live trading account. Like you can have multiple live accounts. One that you full port live account. Have a swing live account where you literally enter low risk positions with the trend, and you just hold those low risk positions for a while. You go break even, you hold those. Scalp account, the main one that you're supposed to use. Scalp live account. Now, guys, let me tell you something. The reason why I use a live account mainly, why do you guys think? Why do you think on my streams you see me trading my prop firm account maybe once, and then 2 weeks goes by and I don't trade it, and I'm trading my live account? Why? Because you have to wait 2 weeks for a payout on some prop firms. So all I do is I get the payout and I stop trading it. I wait for my payout. Because I don't have to risk my money that I've already made. If I made the minimum that I need, 1%, and I made 3%, I'm hella happy with that. I'm going to get that payout, okay? And during that time that I'm waiting for the payout, that 6K, I'm trading my live account every day and getting daily withdrawals from my live account. That's what you should do, okay? If you have multiple prop firms, you take Monday for this prop firm, Tuesday for that prop firm. Now that you have all your accounts ready, one of those is going to make you wait 14 days. One of them is going to make you wait 21 days. One of them is going to make you wait 5 days. And then go trade your live account until you get the payouts. They all reset, and then you trade your funded accounts again. There's a system for everything in place, and that's my advice for you guys. Okay, check out the broker that I'm going to link in the bio, the funded account. You always use code Marky no matter where you go. Next, I do have a Discord community. I have a Telegram community. You can find me sharing my trades. You can find me sharing my weekly analysis. If you guys can ask me any questions, you can get funded accounts from me. Giveaways. I'm always doing giveaways, and I'm always live trading. If you guys want to see me, if you're learning and you want to see me using the concepts that you're studying, live action, go and join my community. I'm also going to link that below. There's going to be links, and I'm going to say what those links take you to. Okay, you're going to see that below. My Discord is pretty awesome. I have a whole bunch of awesome people in there. Sometimes I'm busy. I'm sure a lot of you guys are going to flow in there from this video. And if I can't answer all of your guys' questions, I do, by the way. I slave away on this thing. I just enjoy it. I enjoy talking with you guys. I enjoy like being helpful. And if I can guide you guys, if I can get an awesome message from you guys, then it's worth it to me. So yeah, guys, join in. I have a Telegram. Once again, I share all my stuff in here. 2,300 members already. By the time you see this video, maybe in a few years, hopefully I'll be at 10,000 there. I'm going to keep working. I'm going to keep grinding at it. I do have an Instagram page, Full Send Traders. I be posting content on there, some trade executions. Most of the stuff that you'll see that's actually valuable will be on my story. I just made one on how to start trading. Look at me on a how to start trading grind. Download TradingView, learn a strategy, prop firms, live accounts. Exactly what I'm telling you guys right now. There's different things that you have to learn about the live account: leverage, spread, commission. The broker that I use, 1 to 1,000 leverage, $7 per lot commission. You want to kind of do the research with what you're using. Step 5, scale, swing live account, scalp live account. You guys think that I pulled this information out of nowhere. The reason why I say this stuff is because I personally do it now, and I did it to become profitable to get to this point. So once again, if you guys want to get more information from me, if you guys want to see what I'm doing on a day-to-day basis when I'm live streaming, I announce everything in the Telegram, in the Instagram stories. I'm live on Twitch. This is where I started. Like I said, we can do a little progress check. I'm at 70 followers. But I just started it 2 days ago, so. Videos, there you go. Look at this. 4 days ago is when I started. That's my 5 days. So I've been live for 5 days so far. Honestly, doing pretty good. But, yeah, Rocket League. I'm not trying to get banned on Twitch, so I'm playing Rocket League, guys, right? Shh. Broke down a lot of information so far. I can keep diving into some of the stuff that I told you guys, but honestly, I think that's the main sauce. Now, I did cover internal, external, and during this video, what do you think I said? The day, whatever it was, 4 of the boot camp, I said internal, external liquidity, this is what it is. Do I use it? Hell nah. Because I'm going to be honest with you guys, you don't need to overcomplicate it. Internal, external, these nuts, okay? Significant highs, those are highs that are like previous day high. So there's regular liquidity that's intraday. There's like the previous high that formed 5 minutes ago, or there's the previous high that's also the previous week high or the previous month high. Like let's say, for example, a new month candle opened, then the previous month candle high is a significant high. When it takes out that high from the previous month, there's going to be a lot of a pullback. There's going to be a lot of like it actually reversing. So that's what you guys should focus on, okay? All-time highs, reversals, pairing liquidity with confirmation. So that's actually building a model. So I'm going to be diving into that in day 5, 6, 7. You guys didn't see nothing. Liquidity versus support and resistance. Why I don't believe in support and resistance. If liquidity exists, then support and resistance is flawed, guys. There's a very specific concept called immediate rebalance that actually allows you to learn or like to trade support and resistance in ICT. It's a very similar, and like you'll literally see if you scale out to the lower time frame, you'll see that it's literally bouncing off the previous high. But that's the only concept in that specific scenario where there's an immediate rebalance. Will I personally be trading from a previous high? And it's not a previous high. I'm trading from the immediate rebalance, which you guys will slowly start to understand. Session liquidity, protected liquidity. So all these are specific highs, significant highs that actually cause the market to reverse. Protected liquidity that doesn't get taken out. These are little things that I just know naturally over the years of trading that I learned that seep into my system, that seep into why I'm actually a profitable day trader. So honestly, I think I could go on and keep yapping to you guys, but I kind of want to wrap this video up. It's getting pretty late. Thank you guys who got through this video. If you guys have any questions, then I can expand on this video. Just let me know in the comments. I also am launching a Discord that I have been working on for a long time, and I'm not launching this alone. I have a lot of partners that I'm working with other people that are going to be helping me with. I'm always open to one-on-one. If you want to work with me one-on-one, you like the way I trade, you want me to teach you directly, if you struggle to learn on your own, if you want some accountability, you want me to live trade in a call with you one-on-one, you'll find that from me there. You can always reach out to me on whatever it is. I personally will get back to you. Most people hire VAs to respond to DMs. Sometimes I tell my brother to send out the initial DM, but I'm there. I'm my VA sending out hundreds of DMs. If you guys are wondering whether it's me, okay? Unless it's a scammer on Discord. So let me go into some of the stuff on Discord. When you join, you'll obviously get the links to some stuff, Twitch, YouTube, the broker. You got the general chat. This video is going to go into the free training. There's some other content in there. I honestly can't even talk anymore. So I do have to wrap this up. Again, thank you guys for getting through this video, and I really hope that it helps you in your journey to profitability. I appreciate you guys' support, constant support. Once again, some call to actions. If you guys want a funded account, go through me. I will give you guys the best deals for your funded accounts. Lowest prices. If you get a funded account, if you want to know what broker to use, if you have any questions with how to have a good risk management, where to put your money, what platforms to reinvest into if you're max allocated, those kind of questions come to me. If you're looking for my live trading, then you can click the link below. I will link my Twitch, and you guys can find me there. Thank you guys for getting through this video, and I'll see you guys soon. Hopefully you guys send me some payouts. You guys let me know, hey Marky, like I learned a lot from this video. It means a lot to me genuinely when I see those messages, and it keeps me going. I'm here, sitting here for the last, I don't know how long it's been, maybe just around an hour, but I've been sitting here filming content instead of doing something else. So I'm telling you guys, your guys' messages, they mean a lot, and I feel valuable. I feel like when I post this video, I'm actually going to impact a lot of people, and that was my goal when I started this. And so when you guys write me those messages, that's the reason why I'm literally sitting here right now, because it actually keeps me going. Like, whether I like to admit right now that I'm maybe doing it for the money or whatever, at the end of the day, it's those messages that actually get me sitting here and making me feel that I'm actually providing value to you guys. And you guys will be able to watch this video for completely free. And who knows, maybe I will impact somebody's life with this video. Even if it's just one person, that will make me a really happy man. Thank you guys for getting through this video. Watch some of the other videos on my page, and I'll catch you guys soon. Peace out.